kind of a rough September, but historically, the data points to kind of a big turnaround, maybe as soon as tomorrow. Can you break down what the fourth quarter generally gives us historically?
Yeah, tomorrow, I know we kick October off. It might be a little bit too soon for the market to just do a 180, but we are hopeful, looking forward to the fourth quarter, because seasonally November and December are strong months for the market. And we're also hopeful for a turnaround in economic data. You're starting to see the LEI, leading economic indicators, and other surprise indexes turn a little bit positive. So that we view as a positive sign going into the fourth quarter. Also, I would say the rise in the 10-year, while faster than the market would really like to see, has historically been an indicator that economic data can turn around. So we are hopeful, and of course, we believe the strength of the consumer can help the market move forward as the next few months.
Yeah, let's talk about that strength of the consumer, Lindsay. You cited some data from the American Association of Independent Investors that really focuses on retail investors, showing that there's an increase in bearish sentiment about the markets and a decrease in bullish sentiment. But we aren't seeing people vote that way, at least metaphorically, with their wallet. Consumer spending continues to be really strong. I just did a story yesterday. Salesforce says that prices are up 20% in demand for things like clothing, up 37%, and demand for luxury items like luxury handbags up over 40%. What do you make of all this? Are people feeling, bearish, but still interested in buying stocks and keeping their money in the market?
Yeah, it's really interesting. We're at this point in time where the consumer is saying one thing and they're doing a completely different thing. So you look at investor sentiment gauges like that, they become very bearish and much less bullish than they have been in the past. But we saw last week a lot of money flowed into the market despite the down day. We saw it really was a buy the dip mentality came back into the marketplace. Same with consumer sentiment and consumer confidence. It's dipped in the last couple months, but in the month of August, we saw retail sales surprise to the upside. I think the consumer, when there is a reason to spend money, they go out there and they do it because they still remain flush with cash. You look at deposits at banks domestically, it's at an all-time high, over $17 trillion. The savings rate is still at 9.6%. And a lot of economists will talk about how that could save us going into the next year, meaning that because the consumer is so flush, the growth could come from their spending despite some of the challenges that we might see ahead.
So one thing I know you're keeping your eye on are supply chain issues. One thing that may be encouraging for a lot of retailers and maybe even consumers in the long run is that container prices over the last 2 weeks or so, they've actually declined a bit by about 7%. Do you see that trend continuing, or as we get closer and closer to the holiday season, do you see those supply chain issues and expenses continuing to grow?
I think everyone's incentivized right now to work out the kinks that are in the supply chain, the bottlenecks that have been here for more than a year. And so, yes, I'm encouraged by that data. I think I want to see that trend continue for a little bit longer, but we've also seen data with import prices coming down in the month of August for the first time in 10 months. That's a good sign for inflation. Then also in China, I know the manufacturing data this morning was weak, but some of the export data, the more recent export data, surprised to the upside too. So I think things they're moving, they're working out, and it's going to take a little bit of time. The supply chain issues don't get solved overnight, but we're moving in the right direction.